Welcome to the Neufeld Legal Business Law video series. My name is Christopher Neufeld, and I am a corporate commercial lawyer with nearly 20 years of legal experience, with a strong emphasis upon business development. In this particular video, we will be looking at some of the potential benefits of incorporation. Separate legal entity. The act of incorporating creates a new legal entity called a corporation, commonly referred to as a company. A corporation has many of the same rights and obligations under Canadian law as a natural person. Among other things, this means it can acquire assets, go into debt, enter into contracts, sue or be sued, and even be found guilty of committing a crime. A corporation's money and other assets belong to the corporation and not to its shareholders. When a business is incorporated, its separate legal status, property, rights, and liabilities continue to exist until the corporation is dissolved, even if one or more shareholders or directors sell their shares, dies, or leaves the corporation. Limited liability. Incorporation limits the liability of a corporation's shareholders. This means that, as a general rule, the shareholders of a corporation are not responsible for its debts. If the corporation goes bankrupt, a shareholder will not lose more than his or her investment, unless the shareholders provided personal guarantees for the corporation's debt. Creditors also cannot sue shareholders for liabilities and debts incurred by the corporation, even though shareholders are owners of the corporation. However, it should be noted that if a shareholder has another relationship with the corporation or the creditor, for example as a director, then he or she may, in certain circumstances, be liable for the debts of the corporation. The incorporating statute, be it the Canada Business Corporations Act or similar provincial statutes, places a number of obligations and responsibilities on directors. For example, it says that directors can be held liable for certain acts or failures to act. Lower corporate tax rates. Because corporations are taxed separately from their owners, and the corporate tax rate is generally lower than the individual tax rate, incorporation may offer you some fiscal advantages. We strongly suggest you ask a lawyer or accountant to help you assess whether incorporating might save you tax money. Greater access to capital. It is often easier for corporations to raise money than it is for other forms of business. For example, while corporations have the option of issuing bonds or share certificates to investors, other types of businesses must rely on their own money and loans for capital in general. This can limit the ability of another business to expand as opposed to a corporation. Corporations are also often able to borrow money at lower rates than those paid by other types of businesses, simply because financial institutions and others tend to see loans to corporations as less risky than those given to other forms of business enterprise. Continuous existence. While a partnership or sole proprietorship ceases to exist upon the death of its owners, a corporation would continue to live on even if every shareholder and director were to die. This is because, in the case of a corporation, ownership of the business would simply transfer to the shareholders' heirs. This assurance of continuous existence gives a corporation greater stability. This, in turn, allows the corporation to plan over a longer term, thereby helping it obtain more favorable financing. For legal representation and effective legal counsel in the realm of business incorporation, from incorporating a new company to drafting a unanimous shareholders agreement and more, feel free to contact myself by telephone or email as set forth in our website, www.lawyerincorporation.com. Thank you.